Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Richard Postma, aka Doc, so we're going to be talking about gold's continued breakout. We'll even get into some of the gold stocks and get Doc's opinion on this environment where it seems like everything simply is moving higher. Doc, let's start off with the gold chart. It seems like we're getting a gold breakout maybe a little bit earlier than you anticipated this year. It all started just over a week ago on the very first day of March when gold started to move higher and then followed through once it broke that $2,100 level and is now quite close to $2,200. Doc, in terms of the sustainability of this rally and gold's ability to continue to move higher, what are the charts telling you?
What the charts are telling me is what we've talked about in the past, that this is really a strong market for gold. And the fact that it, from its highs back in 2020, didn't come off that much, maybe about 25% versus way back in 2011 or 12 when we saw a pullback close to almost 50%. And that's a mark of a strong market, and it's showing it right now. And what's good about this gold market is that if you want to focus on the monthly chart with MAC, the 12-month is slowly moving above the 26-month. And I'd love to see that because it's been doing it since the end of 2022. And it looks like it's going to continue doing that for a while. The only thing that would put a fly in the ointment is if the 12-month would take out the 26-month in a strong manner. And I don't see that happening, frankly. I think we're going to continue to, over time, slowly move up in this gold market. And ultimately, that's going to be good for the stocks, which I think are mostly bottoming right now, which we talked about. In fact, we might even be bottoming now on the large cap stocks. That's very possible. So I think for those that haven't been getting in this market, if they want to do well in the future in this market, they better be accumulating some of these better companies.
Well, Doc, just before we get into some of the companies themselves, just focusing on the gold price, since it's getting so much attention right now, I'd love to get your thoughts on it for the short term, maybe looking at a daily or weekly chart as opposed to the monthly chart, because a lot of people think it's getting a little overbought here after such a big run. But sometimes when a market takes off, it can just stay overbought and keep running. So your short term outlook, and then longer term, what do you think a good target or time frame is for how this move in gold could extend if it really is the next leg of the bull market?
Yeah, I think we're getting a little bit overbought here. We could move up a little bit more, for a little bit. But I think we could be peaking, and then I think we'll pull back. But when you look at the daily and the weekly, they still look, okay as far as in the position they're at. But even if we get a pullback, I think over time this year we'll continue to move higher. And actually, that'd be an extremely positive thing if we did it in a gradual way, because that'll give us a stronger market in the future even, and that'll help these stocks start to break out, some of these precious metal stocks, and it could make for a nice long bull market instead of one that's a flash in the pan where we just streak too quickly in an exponential manner up, and then we have to pay a price when it comes back down. So I can see that potentially by the end of this year, we could be higher than 2,500. That's possible looking at the way that the MACD is moving. If it continues to move like it is, we could see 2,500 by the end of the year.
So as you said, Doc, bull markets, they do have natural pullbacks. What level would a reasonable test, a bullish pullback to test a certain level be on the gold chart?
I think it's possible that we could move back and test between 2,000 and 2,100. I wouldn't expect it to go much below that at all. In fact, that'd be quite healthy if we did that. If we would keep moving back and testing the median of the Bollinger Bands on the monthly chart, and if gold would continue to bounce off of that, that would be extremely healthy, because it would really give us a good base to farm with this market. So I wouldn't have a problem at all. We're testing the upper border of the Bollinger Bands on the monthly chart right now. So if we move down a little bit and then move down next month, that would be fine with me. And if we do, uh, I would be continually buying these stocks, which I've been doing for a number of weeks, buying every week. I just hope for little pullbacks on some of them and I purchase some more. So I wouldn't expect it to move back below 2,000 again. The odds of that right now, if we maintain the movement of the 12-month on the 26-month moving average, that possibility is really low. But that's okay to pull back. It would really be healthy if we did that in a controlled manner.
Well, Doc, just diving into some of the gold stocks, you had mentioned the last couple months that we'd probably still see some weakness in the larger cap mining stocks, the majors and the mid tiers, and we absolutely have. In January and February, we're not very friendly to the larger cap stocks. The juniors have already been beat up for a long time, and some of them just finally dried up on volume. They weren't getting any trading at all. In this environment where we're seeing a gold breakout, does that stave off any further major downside slides in some of these stocks? Like we had talked about a couple of the stocks you were watching as sentinel stocks in the sector, and you thought they had lower targets. Are those targets off the board now that gold is broken out?
I thought the odds were pretty good that we might hit 25 on Newmont. And we still, the thing to watch on Newmont is on the monthly chart, the MACD. And if we would move down again next month, we're still in that channel where we're moving down. Then there's a possibility we might see a pricing between 25 and 30. However, the encouraging thing is on the ADX. We on the black line, which is a neutral line for the bullish and bearish lines of the red and green, we bottomed in an area we've been before. And that's encouraging from the standpoint of we might not head much lower in that. And if we don't, we may be seeing Newmont right now bottoming out in this $30 to $35 range. So that's encouraging, actually. But then if we would get a turn up in the 12-month, that would tell you pretty much that maybe we've seen the low in Newmont Corporation.
So a lot of these stocks have gone through a bounce. Even GDX has bounced quite nicely just over the last about 7 trading days, maybe. But Doc, have they done enough? Have the stocks done enough? Has GDX done enough to confirm this much more bullish outlook for the overall gold sector, including the stocks?
It hasn't, because it hasn't broken out of its trading range, the weekly trading range. It's just had a nice bounce off the Bollinger Band on its weekly chart, which it's done multiple times in the past on this movement down. So we'd have to see it break above to be more encouraged. But right now, it's still in that trading range, and until we break out of those trading range on a multiple number of these stocks, we can probably still expect to see them in a bottoming process. But anytime they come back, I feel that you better be buying these things, because with what gold's showing us right now is just predicting down the road that we're going to have higher prices. And that ultimately is going to impact these precious metal stocks.
Well, Doc, as we were talking here, I just pulled up a number of kind of bigger mid-tier stocks, or even Newmont as you were talking about it. And one of the things I note on the weekly chart is that most of these stocks, they may be getting up closer to their 50-day weekly or 50-week moving averages, but they're nowhere close to their 200-week moving averages. In fact, I was looking at First Majestic, Equinox, Newmont, Hecla, who are all of them are way below their 200-week moving averages. A lot of people in the market put a lot of importance on those 200-day and 200-week moving averages. Do you think that's significant, that we need to see them clear those before we can declare a bull trend, or is it just exciting that they're bouncing at all?
Absolutely, and I think that's an excellent point. And what you're just saying, Shad, essentially is that we're still in these trading ranges. And you've got to technically start to break some of these patterns, like the upper Bollinger Bands or the 200-week moving averages, to know that you're really in a new bull market for these precious metal stocks. So, we could pull back again in gold, and if we do, we're going to stay in these bands. And it's going to be a slow process, like I talked about months ago, where don't expect a V recovery for these stocks. expect a higher highs and then higher lows for weeks into months, and then eventually we're going to get the situation where gold really takes off in the future and exponentially, and that's when these stocks are really going to move in. But I think we're weeks away from that yet. I think it's going to be a gradual move higher yet. But like I said, that's a good market to be in and to take positions to wait for the ultimate real rebound.
Yeah, well, Doc, you can look over some of these charts just in the last week, and it does look like it could be starting a V-shaped recovery here because of the speed that a lot of these stocks have recovered. But again, it's really just one weekly candle here that has shown some of this follow through. This week's going to be important to see. What do you take away from this environment, though, where it's not just gold stocks or gold that are starting to run here? It's a lot of different sectors, a lot of different markets, domestically and internationally, that are running higher, that people are talking about all-time highs in.
Well, all that means is there's a lot of money in the system yet. And that probably goes back to the pandemic when they threw tons of money into this. And of course, you got the fiscal stimulus money that governments have been throwing into that, and it's all a function of money and money supply. And what really gets markets going is when velocity picks up, which it hasn't, and that could be impacting the gold market a little bit because the consumer is certainly not appreciating what's going on with credit card debt being what it is and at an all-time high, and then they're paying 20%, 21% interest on those credit cards. So, it's a function of a lot of money sloshing around in the system yet. And as long as that continues, you can expect some of this velocity in these markets. And I think that's what we're seeing yet. And one of the charts that I find very interesting, we talked this off mic, is the bond market chart. The bond market chart worries me from the standpoint of, if you look at some of the things that are happening in it on the monthly chart, it's signaling to me the potential that within the next year, maybe the end of this year or into next year, we may start another leg of the bond market down. And that tells me that inflation has not been solved and might not be solved. And then that tells me that the Fed may disappoint the markets by not lowering as much as some people say they're going to lower this year, or they might not even lower. Because if we start to get some surprises in the inflation figures, they got a real dilemma on their hands. But the bond market worries me because it's signaling to me that down the road, we're going to have higher rates than we've even seen so far. At this point, it's showing that. Now, that could change, but that's what it's showing me right now.
Well, Doc, if that's true, and if the bond market has a lot more weakness over the next year or so that's going to start showing up, that means interest rates are going to be going higher. What does that environment mean for the precious metals markets? Because typically higher rates are not a positive, they're a headwind to the gold price. Now, gold's held up okay considering all the rate hikes that have happened, but most people think that's in the rear view mirror and that rates will come down. If rates go up, and if the bond markets keep correcting, what does that mean for precious metals?
I think for precious metals going forward, this may be a time when it doesn't impact precious metals, actually, because as we know historically, sometimes increasing interest rates can drive inflation higher, actually, because those costs have to be rolled over into other people's responsibility. If you have industry with higher costs, they're going to raise prices. So oftentimes, increasing interest rates do not necessarily mean that you're going to have lower inflation. It often adds to the conundrum of rising inflation. So it could happen this time that that's what occurs. And if it does, I don't think it's going to affect the gold price that much. And the gold market might be telling you that also.
What about impacting the gold equities, especially the smaller ones? If cost of capital remains high, well, it's harder for them to get work done. And if inflation keeps ticking up, it means that the majors, well, they need much higher gold prices just to keep up with inflation. So how do you balance out that whole scenario for the gold equities?
Yeah, and that's really possible, especially if you get a general move in commodities again, Corey, especially when cost of energy for these companies, because we could see the same thing in oil and gas. Those prices could start to move again, and that would be a negative for these companies. And that's why I don't see a lot of these companies breaking out necessarily right away. And that's one of the reasons fundamentally why I think that it could be a gradual move higher over time until something gives where these companies really take off, which with increasing gold prices, ultimately I think will help them. I've watched people say for years they've been pushing $5,000 to $10,000 gold, and way back when, I think I've been hearing that for over 20 years. Well, I used to listen to that and think, oh, they're full of it. Well, back then they probably were, but going forward, now I think for the first time those people could be correct in their assessment. I wouldn't be surprised to see within 5 or 6 years where we see $5,000 to $10,000 gold.
Wow. Well, that would be something that would really be a big change in the markets because, yes, people have been saying that for decades, but it seems like you're warming up to the scenario where that actually could play out over the next 5, 6 years. I got to ask you then, Doc, what about silver? Because a lot of times there's a much tighter correlation with both the gold and silver stocks to silver itself, the price action, than there is even to gold. What do you make of it? It's had a little bit of a bump, and that's probably correlated with the move in the mining stocks. But when is silver going to get out of its funk and really break out?
Well, silver right now, this week, if we close up here, it's a nice close. And silver chart has flattened out, which is really nice. It looked last month like it could move lower, but this month has really helped silver. Silver is trading in a very nice range right now. The other very encouraging thing about silver is if you go to the strength indicators like the ADX chart, where the black line, the neutral line, has bottomed out. Now that tells you that, okay, that's probably going to give some support to the silver price. And then the question becomes, what's the next big move when that black line starts turning up? Is it going to be down in the silver price or up in the silver price? And I would bet that when that next move comes, it's going to be a move higher in the silver price. So I think we're in great shape for the silver price right now in the long-term charts. It looks very encouraging. Now that could change, but with gold being as strong as it is and breaking out, and silver generally moving somewhat with gold, I think it's very encouraging the way that chart looks right now. And then if you get a general move in these commodities, especially if we're internationally, and especially with BRICS moving to a commodities-based type of system as far as currencies for them, or a currency for them, that's only going to be supportive of commodities. So I think silver in the future is starting to look better and better, not only from a fundamental standpoint, but from a technical standpoint.
Well, very encouraging to hear, Doc. I think a lot of things have changed just in over a week here as gold broke out and we started to see some higher volume in the gold equities. We started to see some life in the silver price as well. A lot of things continue to move higher here, and now gold and the gold stocks seem like they're taking part. Gold was holding up very well. It was just the underperformance of the stocks, which I know a lot of us are watching very closely to see what sort of follow through we can get time and time again from those gold stocks, since they are coming off of some very, very low levels. But it's something we're going to follow up with you next month on. This month of March could be a very important one for precious metals investors after what was a quite painful 3 to 4 year stretch. Doc, thank you very much for your time. We'll chat again next month. It's always a pleasure chatting with you.